Hello everyone and welcome back to my morning report analysis videos with me, Richard Bear, market analyst at Hantec Markets. On Tuesday the 5th of June, let's look at sterling dollar. We've just had out the UK services PMI data, which came in better than expected. So decent bump higher in cable. Yeah, it's not too bad actually. It looked early doors today as though that the market was sort of struggling again, following on from that bear candle that we saw yesterday. That failure at 134 figure sort of produced that resistance area that the market had been sort of shying away from. And yeah, there's a little bit of a jump higher today, now 60 pips up on the day, and it's helping to sort of regenerate a little bit of that upside momentum. Look at that RSI that is pulling higher, the MACD lines which have crossed higher and sort of looking to accelerate, and the stochastics as well. So if the market can push above 134 figure, then I think 134.50 comes back into the equation as that resistance area from the old January low and then subsequent May low. That becomes a basis of resistance, so that needs to be broken for the market to sustainably really sort of push higher. But the signs are pretty good, having sort of seen that services PMI data coming out and the market responding so positively. You see that on the hourly chart where we're sort of pulled up again. We're sort of, you could argue, I suppose, let me see if you get a trend. No, not quite an uptrend in there, but you sort of are playing out this sort of run of higher lows now, and you're also seeing higher highs as well. So as I said, if you can break out above 34 figure on this move higher, then it's a pretty decent response. You've got the hourly MACD lines and RSI, which are sort of slightly more improved, but need to sort of see that those MACD lines pulling back above neutral again. But the stochastics on the hourly are decent, the RSI on the hourly is decent. You now need to see, I think, also a basis of support forming around that sort of breakout level of 33.45 area, which would, I think, again help to sort of drive a basis of support and help to build the momentum once more to the upside. So there is an improving element to this chart following on from this jump higher that we've seen in the last, on the reaction to the services PMIs, but they need to be, the market needs to sort of consolidate and hold on to these gains and then pull above 34 figure and then test that 34.50 level. But it's a decent response, and there is the prospect now back on the table, if the market can sort of hang on to these gains, that there is a potential recovery at play. Now obviously the ISM non-manufacturing PMI this afternoon for the US is going to be a factor here, so we'll see how the response to that becomes. But yeah, at the moment it's a pretty decent reaction, but 34 figure is the resistance. So I wish you good luck in trading, and I'll speak to you later.